Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about GBPUSD because at the moment we do have quite interesting price action and structure. In fact, starting here from the monthly, we can clearly see how the market is at the moment testing an incredibly strong level of monthly demand and support. In fact, from here the market started all this move to the upside, again here tested and rejected, again here tested and rejected, and at the moment we have once again tested this level and immediately started rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can easily identify this impulse and correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. Now, if we do that, we can see how the market has just reached the 50% retracement taken on this impulse. Now, usually when the market actually reaches a 50% retracement, it at least tries to create a rejection lower. So in a situation like this, since on the weekly we're testing this 50%, we could expect a short-term rejection lower before then getting a longer-term bullish continuation. Going down on the daily time frame, what do we see? Now, from a daily perspective, situation is actually quite clear. In fact, what we can notice is that, first of all, we had a market which created this overextended M pattern. I made a video after the creation of this pattern explaining all the reasons for which we expected the rejection higher and the completion of the pattern itself, and that is what the market gave us. Then we had the market that was basically testing previous support and resistance. So I made another video explaining why we could expect first this move to the downside, then a break to the upside. And once again, that is what the market provided. And then after that, I made another video explaining why we could expect a retest of this previous resistance turn support and then a rejection higher. And once again, that is what the market has just given us. Now, by the way, I will link all these previous analysis in the description so you can go and check them out for more free education. But at the moment, what do we have and how we could be looking for the next potential move? Now, if we look at the structure that the market has from a daily perspective, we have in fact once again broken above previous daily resistance turn support. The problem is that on the weekly time frame, as we have already identified, we have a market which has an impulse and correction which has just tested the 50%. Now, usually in a situation like this, what would happen is that the market basically provides a short-term rejection lower and then prints the continuation to the upside. Why the continuation to the upside? Because we have already seen that on the monthly time frame, we do have more room for bullish continuation, rejecting this very strong support. Now, what this could easily translate to, if we look at the daily time frame, would be the possibility of having a stop hunt below this low. In fact, a lot of people probably have their stop losses which are placed below this low. Now, if the market actually manages to create this move to the downside, all these stop losses here would be hunted, giving at that point the possibility for the institutions to buy more, because as you know, it's not that easy to just click a button and buy a massive amount if you are basically an institution which has to put in the market a huge amount of money. Because for every buyer in the market, there needs to be a seller. Now, if there aren't sellers, what they usually do most of the times is they create manipulations. And for example, a stop hunt is a manipulation because it triggers all the stop losses, bringing the liquidity in the market, bringing the sellers into the market that they need to actually fill in their orders, and then the move to the upside could easily start. Therefore, in a situation like this, if we actually get this break to the downside, that would also create an M pattern from which we would have even more confirmations for another setup to the upside and the completion of the M pattern. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, we can see how lately net positions have been dropping. In fact, we have now reached minus 80k net positions, slowly and steadily declining, with 400 shorts added with the last report and 600 longs getting closed from an institutional perspective. Now, this obviously is supposed to make the pound weaker, therefore this rejection to the downside for the manipulation, and then the rejection higher after the buy orders have been placed is definitely a possible scenario. So we don't know if the market will actually create that manipulation, but if the market actually prints this manipulation to the downside, creating this M pattern, at that point, how we could be looking for the potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the upside and completion of that M pattern at the neckline. Now, if you don't know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.